Hello and welcome. This is BloombergQuint Stocks to Watch. I am Agam Vakil, and as usual, we talk about three stocks which are in the news, and we take them up with our experts. And on that note, let me get in our expert for today. We have Mr. Anand Tandon. He is an independent market expert and to what we can expect from three stocks that we want to discuss. One is Reliance Industries, Cipla, and of course Tata Motors. Well, on that note, let me welcome in Mr. Tandon. Mr. Tandon, good morning and thanks for joining in. My first question is to do with Reliance Industries. Now, what we have seen in Reliance is, yet another investment in geo platforms. In fact, what we are seeing is that this time it's Saudi Arabia's sovereign wealth fund, which is putting in about 11,300 odd crores and buying around a 2.3% stake. And if I'm not mistaken, it's nearly 25% of Reliance Jio platforms, which is already with major investors. And in fact, this is the 11th straight major investment in Jio platforms in the last 9 weeks. Mr. Tandon, where does this leave Reliance Industries? We've also seen that rights issue come by. So it clearly does have a lot of funds it has raised. A lot of this will be used towards reduction in net debt. Where do you stand in Reliance Industries, keeping in mind the recent developments as far as this company goes?
Well, the recent developments have obviously helped a lot in terms of mitigating the concerns, which was that the gross debt was ballooning. You had almost 3.7 lakh crores of debt on the balance sheet of the company, and the investments that were being required to continue to fund the telecom and retail ventures were not going to end anytime soon. This kind of fundraise obviously mitigates that substantially, and the fact that you have raised a substantial amount of money, over 1 lakh crores, means that at least on their stated target of being debt free at a net debt level by the end of the year, they'll probably meet that perhaps even before time. So from that perspective, it certainly adds a lot of firepower to the company in terms of being able to expand their retail and the geo base. The progress in terms of what they're doing in the parent company in Reliance itself is also fairly encouraging. You would expect to see BP buy out complete their acquisition of 50% in the petrol stations and so on. And you are still looking for ensuring that Aramco comes in for the refining sector. Overall, I think Reliance has positioned itself very well, and therefore I would imagine that from here on, it will certainly be one of the outperformers of the market. Agam, I think you.
Yes. So, I've just unmuted myself. So, we'll move on and talk about Cipla. Then, in the latest development, we understand that Cipla and Roche Pharma have entered into an agreement to provide access to innovative medicines, and this will be distributed in India. Cipla will be marketing and distributing some of Roche Pharma's trademark oncology drugs, which will include Herclon, Avastin, and Ristova. I want to take up the larger picture up with you, Mr. Tandon, with respect to Cipla. It's not really stood out as compared to many of its peers of late in the kind of rally that we've seen. But of course, being in the pharma space, it has seen its gains. Where does Cipla stand at this point in time as compared to the rest of the sector?
Well, frankly, it is doing better than what it was doing in the past. It has had a huge history of management changes, structural changes. Their portfolio in the US has been delayed somewhat, but I think most of that is now seems to be behind them. We are seeing greater traction in terms of whatever they're doing in the US, and their new found focus in terms of trying to market into India is obviously going to keep them ahead of the curve as far as the market share gains are concerned. However, it may not be that very simple, because other companies, for example, Dr. Reddy's is also refocusing on India. Suddenly, the Indian market appears to be reasonably stable and growing on a double-digit clip. So most of the companies who are focusing largely overseas have started to now look back at India. So there will be a kind of fight for market share, and that kind of explains the Roche in licensing that they are doing, where they want to build up their portfolio to be able to go into more specialized drugs. But this is still a niche kind of drug. It's not likely that it will take up a huge amount of revenue, but overall it enhances their India push. I think you're still looking at Cipla probably now trading at higher than what it used to historically. And while there is going to be a focus on pharma overall, and you expect to see Cipla also benefiting, I think it's already moved up quite a bit. I mean, just before the result, it had a big jump, and then it's moved up from there as well. So I would argue that from here on, I would place it more at a neutral than something that you want to rush in and buy.
Okay. And from there on, we Tata Motors. From what we understand is that the long-term ratings have been downgraded by Moody's to B1 from Ba3, and the outlook on all the ratings has changed to negative from ratings which were under review. This, of course, is only the news that we've had overnight, but we do know that Tata Motors is one of those companies which has been under severe stress, much more stress as compared to a lot of the other auto companies in the space. Uh, Mr. Tanan, your view on Tata Motors, what do you do with it? If you have it in your portfolio, and secondly, uh, would you want to dabble with this one if you don't?
I think the short answer is no. Frankly, I am no fan of Tata Motors. I think the cash flows are going to remain straightened. They're going to continue to show losses at the very least for another couple of years, and you will have negative cash flows coming through for most of that period, perhaps even a longer period than that. The only thing that the silver lining right now is that you've seen a resurgence in terms of some sales orders coming through in China and perhaps US. But otherwise, most of the UK portfolio is still being supported. You're getting money from the government for some of the furloughs. That may not last for too long. I don't think there is a great demand upsurge that's happening in the UK. And India, the less said, the better. I think they've pretty much lost the plot in India. I can't see a single product line in which case where they will be able to increase their market share. Of course, India is now only hardly 15%, so it doesn't really matter the overall scheme of things. But I don't see anything great happening in Tata Motors at this stage. I think they need to go back to the drawing board and figure out their growth plans going forward. Capitalizing R&D is not the best way of doing things. I'm not a fan of the stock.
Okay. And so, Mr. Tanan, let me conclude by asking you about interesting themes that you are picking up at this point in time when it comes to Indian markets.
Well, I don't think there are new themes per se, but if you have to look at stocks that you may want to buy, I think the business models that are resilient, which are likely to recover post the problem with COVID, are the ones I would look at. And I think, for example, since you were talking about pharma, I think hospitals is an equivalent space where currently the revenues and margins will be under pressure because there's been a postponement of almost all surgeries, etc. But it's not as if you can do that forever, so that's likely to come back, and therefore a weakness in prices can be somewhat interesting. Uh, and related areas, for example, the path lab area is also something that again there has been a erosion in value which can come back. So I would look at sectors where you're not so much dependent only on the fact that people will go back and start consuming. It's something that has to be more non-discretionary and yet something that can bounce back quickly. Keep having me.